Brad Williams, Frugal Finance, Planning for Retirement, addressing long-term care insurance. Long-term care insurance, a guide for retirees. Long-term care is often a significant concern for retirees, as it is a vital part of risk management in later years. Many people are familiar with the idea that the likelihood of needing long-term care increases with age, and the potential costs associated with it can be overwhelming. Medicare and supplemental Medigap policies offer limited coverage for long-term care services, and long-term insurance policies can be expensive or have restrictive terms. This raises the question, should you consider purchasing long-term care insurance? This article addresses the key issues surrounding long-term care insurance, helping you decide if it is right for you, and how to evaluate potential policies. What is long-term care? Long-term care refers to the services needed when a person is unable to perform basic daily activities due to prolonged illness or disability. It covers a range of services from skilled nursing care in a facility to home care for assistance with daily tasks. Long-term care services include skilled nursing care, care provided by registered nurses or therapists, typically on a daily basis under a physician's supervision. Immediate care, occasional nursing care or rehabilitation under skilled supervision, but not 24/7. Custodial care, assistance with daily living activities such as bathing, dressing, and eating. This type of care is often provided by non-medical staff. Home care, support services like therapy, homemaking assistance, and care from health aides in the home. Should you consider long-term insurance? The need for long-term care varies for each individual, and predicting whether you will require it is difficult. It may be triggered by many conditions, from chronic disease like arthritis to severe cognitive impairments such as Alzheimer's. However, your health history, family background, and other factors can give an indication of your potential risk. It is essential to consult your doctor and insurance agent to assess your potential situation. Financially, the need for long-term care is more predictable. The cost of nursing home care can range from $70,000 to $140,000 annually, depending on your location. Financing long-term care. Medicare provides limited coverage for long-term care. It primarily covers skilled nursing and rehabilitative care, but only in specific circumstances. For example, Medicare Part A covers up to 100 days of care in a Medicare-approved facility after a 3-day hospital stay, but only the first 20 days are fully covered. For the remainder of the stay, Medicare contributes a limited amount, which can leave you with substantial out-of-pocket expenses. Medicare does not cover custodial care, which is most often needed, nor does it pay for long-term stays in nursing homes. Given these restrictions, there are a few ways to cover long-term care costs. Self-insurance, this involves saving enough money to cover potential long-term care expenses. Long-term care insurance, this allows you to transfer the financial risk to an insurer, helping you cover long-term care costs. Both, some may choose a combination of self-insurance and LTC insurance to better manage the risk. LTC insurance can provide coverage for various levels of care, including skilled, intermediate, custodial, and home care. When evaluating long-term care policies, consider the following key features. Coverage. Look for a policy that covers all levels of care, as the need for custodial care is common. Ensure the policy includes care from licensed professionals and offers the benefits mandated by your state. Benefit period. Policies typically offer benefits for 2 to 6 years or a lifetime, and you should consider what duration suits your needs. Benefit amount. Determine the daily or monthly benefit amount that will help you cover the cost of care. Consider local care cost when selecting the amount. Elimination period. This is the waiting period before the policy starts paying benefits. A longer elimination period typically results in lower premiums, but means you will need to cover initial care costs yourself. Group long-term care insurance. Some employers now offer group long-term care insurance plans, which can be an affordable option. These plans may offer competitive premiums, and they often allow coverage for family members. Additionally, group policies are typically portable, so you can retain your coverage even if you leave your employer. Should you purchase long-term insurance? If you're contemplating long-term care insurance, several factors should guide your decision. Affordability. Premiums can range from $2,000 to $4,000 annually, depending on factors like age and coverage options. Consult with your agent to compare different policy structures. Public assistance options. If you're open to receiving care through Medicaid, you may not need an LTC policy. However, many prefer to maintain control over their care options, including long-term care insurance, a preferable choice. Family history. If your family has a history of requiring long-term care, you may be at higher risk yourself, which makes long-term care insurance more relevant. Family care availability. If you have relatives who can provide care, or if you're comfortable with the idea of family-based care, you may be less inclined to purchase insurance. However, this can put a strain on your family and may not be a long-term solution. Estate planning. Long-term care insurance can help protect your assets from being depleted by long-term care costs, preserving wealth for your family. Care flexibility. With long-term care insurance, you may have a wider range of care options compared to those without coverage. When selecting a policy, consider how much of the long-term risks you're willing to retain versus transferring to an insurer. It's helpful to plan for a mix of short-term and long-term care coverage. Life care facilities, a housing solution for long-term care needs. An increasing number of seniors are opting for life care facilities, which provide residential accommodation and a range of care options. These facilities typically require an entrance fee, along with monthly payments for services like meals, maintenance, and access to long-term care if needed. Some life care facilities also offer skilled nursing services and rehabilitation. Tax treatment for life care facilities is complex, particularly regarding whether payments qualify as deductible medical expenses. It is recommended to consult with a tax advisor before making any decision. Accelerated death benefits as a supplement for long-term care. A relatively new option in long-term care risk management is the accelerated death benefit rider, which can be added to a life insurance policy. This rider allows you to access a portion of your death benefits while still alive under certain conditions such as terminal illness or long-term care needs. While these riders can provide some assistance, they are not a comprehensive substitute for a full long-term care insurance policy. They are, however, a helpful complement in specific situations. Conclusion: long-term care insurance is a critical consideration for those planning for their retirement years. By evaluating your personal situation, financial readiness, and the available insurance options, you can make a more informed decision about whether long-term care coverage is right for you. For many, a combination of insurance and self-funding may offer the best balance of coverage and cost management. Regardless of your choice, planning ahead is essential to ensure you can maintain your quality of life without undue financial strain. Comment if you have any questions as it relates to long-term care, retirement planning, and the costs related to retirement. Brad Williams, Frugal Finance. Thanks for watching. Hope that helps. See you soon.